Welcome to our April 16th Facebook Live question and answer session. I got three of the guys from here from Ecivda. I'm going to do a quick introduction before we get into our little roundtable conversation. We're going to try to do it a little more free-flowing this time. So Shawn Todd, I'm going to introduce you first. How are we doing today?
Hey, Ben. Thanks a lot. I'm doing really well. Thanks.
Good, good. I'm happy to hear that. Brian Adams, you're the next on the docket.
Wonderful, Ben. Thanks.
Excellent as well. And last but certainly not least, Corey Butler. How are we doing?
Great. Thanks for joining, everyone.
Awesome. Perfect. Guys, let's start off with the first one. What should one be looking at with monthly cash flow right now?
That's huge, Ben. I think right now cash flow is going to get you through this. And I think that's what we've been talking a lot to our clients on is reaching out is really putting yourself in a position where you know you can survive if it's 30 days, 60 days, or 90 days, but certainly making sure you employ some strategies that free up whatever cash flow you have and have a really honest look at your reserves and where to draw from if you need extra money. And I'm sure the other guys can jump in too, but I think this is really important right now.
Yeah, one of the things we've done with our clients is make sure that if they're receiving income at this stage of their life, we've made sure that that's coming from things like a money market or cash, so that it's not going to be impacted by what's happening with equities, for example. So we've made sure that there's at least 3 months of income there to help weather the storm and to enable them to continue to be able to draw income from their investments.
And I think also, from the aspect of people just paying attention to, where is some of my cash flow hemorrhaging, right? Have I been spending too much on my online subscriptions? Have I signed up for every streaming service? Should I be cutting there? I think it's kind of one of those periods where, we've probably been operating in kind of a just in time with paycheck type environment for people's cash flow. And I think it becomes ever important to reevaluate that, maybe it's time to set aside that emergency fund. Maybe I need to be reviewing, am I spending too much on, my car insurance? Have I evaluated that? Have I just let things renew? I think this is one of those periods where you really have to start to crunch down on the monthly cash flow numbers.
I think it's totally a good point. Yeah, go ahead.
To have a budget and to look at it and review it in light of where you're at right now with this pandemic and cash flow, and look at it and say, is there anything I can change, or am I going to be okay?
And I think there's opportunities there for family homes and businesses as well. They just have to have a look at their own situation, have a look at their own map and where they're going, but also be aware of some of the programs. I mean, we just talked this morning to one of our employees, and they were talking about opportunities to lower, like Corey mentioned, car insurance. So we'll get into that in a second, but there's opportunities there to lessen some of your expenses. If we go through, there's, the CERB benefits. We've got, the extension of the Canada Child Benefit and how much they give out. And there's a whole bunch of government programs right now where they're extending extra cash for those in need. And I think that a lot of people don't even know that they're there. So I think the biggest thing you could say is, hey, just have a look, make yourself aware of these opportunities, whether it be in your own personal cash flow or whether it be from one the government's going to provide you, but at least don't overlook anything. And there's ways we can get into today about how you can, almost like a checklist and how you can do this.
Mm-hmm.
Like you look right now and you say, for the people that are now working from home and aren't, an essential service worker per se, I would have to say that there's a lot of people that are saving money just on fuel costs on a weekly basis, right? And I think one of those things that's probably an immediate savings that you should be, not discounting. That's not, in my mind, that's not free money that you go out and spend now. put that into your savings program, help build up that cash reserve. We don't know, you know, as much as we all want to get back to reality on May 1st or whenever that timeline allows, there's potential that this could go on a little bit longer than we would like. And so I think those opportunities, even if it's $50 a week that you're saving now in terms of your fuel costs, I think allocating that into your emergency reserve plan is critical right now.
Yeah,
That's
and two
huge.
of the things that you may want to look into is either if you have a mortgage, maybe talk to your mortgage company, find out if you can defer a payment. And one of the other things is talk to, if you have credit cards, they typically are charging an exorbitant amount of interest. But if you contact your bank or whoever you hold the credit card with, you may find that they're willing to lower that interest rate and give you a break for a period of time. So that's two phone calls that would be worth making and finding out if you can save some money right there.
Absolutely. And I think the other opportunity that becomes available as well is just, you know, even reviewing your cable and your internet costs. And right, sometimes it's quite surprising, even though it's a painful experience to get on with some of the cable providers. It's generally a 1 hour experience. It's quite surprising all of a sudden, you know, the savings that are available there. So I don't think people should be discounting that as much as there's an effort involved to go through and make those calls. I really do think they can, $100 here, $50 there. It does start to add up, you know, when you're in a position that you have to start pinching pennies.
Agreed. And I think it's important too for people just to be aware of the services, even delivering your groceries. Like some people are unaware that you can actually have groceries delivered right to your house. And things like, it was Brian's birthday this week. So I sent him some craft beer, local craft beer, right to his, and shout outs to Conspiracy Theory Brewery. That's they delivered some beer, but I've had some from other local craft breweries delivered as well. So that's some great services going on. I know that just yesterday I was able to order coffee beans, and we normally get from our local coffee place, and it's delivered right to our home. So it's there's lots of businesses doing this. I believe most of the local grocery stores, Herb and Spice is doing that now. Even online services that people can use. A lot of the yoga studios, fitness studios are doing online classes. So I think that's important that people just make themselves aware of these services that are happening more and more online.
And the other option too right now that sometimes, during this crisis that people aren't considering is get your taxes done. There's a really, if you're in a position that you can get a tax refund, like that's money that's owed to you that doesn't have any recourse on it. And so, if you have that extra time to get your taxes done, there's a ton of online programs that can help you with that. Accountants are available to process things right now. So don't discount getting that stuff done either. And on that note, going forward, if you are working from home, it's really important now for when we get to that point for your 2020 tax return, if you're working from home, you're now able to claim a bunch of things in your home, right? And your employer will be providing you with what's called a T2200. And so don't discount that. Being able to, deduct whether you're using your cell phone now for work, your internet, a portion of your utility bills, these things will all help, create a further tax refund.
Yeah, great point,
Good
Corey.
point.
Yeah, that's a really good point.
Did we want to go through any of the government programs? I've got a bunch written down here. Did we have space for that at all? Or
Absolutely.
Yeah.
100% highlight it for the people.
So just want to remind people of, the CRB benefit, which has been talked a lot about right now. It's a $500 a week benefit for up to 16 weeks. Must be a resident of Canada, over 15 years of age. have stopped working or will stop working because of COVID, and you must not have quit your job voluntarily and must not be on EI. But it's a great benefit for people who are losing work and need to have money coming in. So that's important. I think the flexibility of that program's been opened up a lot in the past 24 hours. I know yesterday we were just speaking about that, announcing that there would be seasonal workers now would be included inside this benefit program, which that was a concern before because there are some workers who of course aren't working right now, but would be going back to work, so they wouldn't have qualified. But now because of the seasonal worker addition, that's going to open up to a lot of people who probably need this benefit. I know one of our former guests on our podcast, we have Corey and I run the Mind and Money Show podcast on Spotify and Apple iTunes. We were lucky enough to have Preet Banerjee on our show, and I know he's done a fabulous job of getting information out on his Instagram every single day, talking about the government programs, talking about some of the services, but he also has a calculator that's free to use for anyone. So people can join him. If he's easily found if you just Google preetbanerjee.com. So that's Preet, P-R-E-E-T, Banerjee, B-A-N-E-R-J-E-E.com. And then on the top right-hand side of the screen, he's going to have his COVID-19 calculator where you can put in your own example and it'll show you what you should be receiving. And that's a great opportunity. I'll just run through that. There's probably 20 programs. I'm going to run through 6 or 7 really quick ones, but things that if you want to look this up on your own, you can just Google Canada COVID-19 Emergency Response Plan, and you'll be immediately taken to, it's a one-pager that the Canadian government has put together that lists every single program and breaks it down into categories, whether you're a business owner, whether you're a senior, whether you're a student, and what's most applicable. But some of the ones that are really important are the increase of the Canada Child Benefit, $300 per child. Tax return filing is now being deferred to June the 1st, 2020. There obviously is that program that larger banks are employing for the mortgage deferrals, pushing that off. We've got the reduction of the mandatory RIF payments. This is very applicable for seniors because, of course, if you're not needing that income coming in, it may be a good time to defer some of that payment coming out. Suspension of repayment of interest to student loans, and that's going to be deferred until September 30th, 2020. We've got the Canadian Emergency Wage Subsidy, which has been very critical for a lot of small businesses and employers to keep staff on. And at one point it was coming out, it was going to be a 10% addition to these businesses to help with their wages. And now it's up to 75% to a maximum of $847 per week for a 12-week period. So that's been helpful. And the last one I wanted to identify was there is a very easy not mandatory, but a very easy Canada Emergency Business Account loan that the government has backed, which your financial institution will offer you if you ask. And for most business owners, it's just a matter of being in touch with your bank to say, hey, I want to have this Canada Emergency Business Account loan. It's interest-free up to $40,000, and that can be done quite quickly. And of course, will help a lot of business owners float payroll or use for expenses for the next 3, 4, 5, 6 months. So these are some of the stronger programs, I think, but I think just the fact that we even are able to talk about some of these programs tells me how robust the government has been, the programs that they've been working on. It's been fantastic, and I'm really glad to see both provincial government and the federal government doing so much for us all.
All good points. And I think one of the other programs, if I'm not mistaken, is students for summer employment. The government's willing to supply their income for the employers so that they can hire students still. Yeah. And that's something that any employers listening may want to look into, just because it's not going to cost you anything. And it's going to really help out some students who are trying to earn money so they can go back to school and become worthwhile tax-paying citizens.
That's a great point, Brian. And I had looked into that a little bit earlier this week. It's the Canada Summer Job Grant program that's now being funded 100% for employers. Now, the Canada Summer Job Grants applications to that program ended on February 22nd. So right now, as it stands, those people who are already in the program who had previously applied would receive, instead of 25% funding, now would receive 100% funding. But there's been indications by the federal government that they're going to open this up and extend that deadline. So the mention to me right now is to be that the best way to do this is, if you're an employer looking for this opportunity, the best way to right now is to reach out to your MP and say, hey, I'm a business that would like to look at this program. Can you please include me, and have some conversations with your local MP? Because right now there's not very little on the website, and they haven't changed it as of yet.
Okay, good.
Yeah.
Good to know.
All right, our next question, guys, is why is estate planning during this period so important?
And I'll start off with that. Well, I think it's tremendously important right now, because typically when we sit with clients, the number one thing that they most worry about, depending on where they are in their life cycle, is either going to be cash flow, what's coming in, what's leaving every single month, or they worry about their investment rate of return. And that's, I think we're habitualized into believing those are the two most important things. We worry about today, and then we worry about, hey, I was in my my work coffee room with my colleagues, and they made 7% on the return, and I only made 6, or something to that effect. And why is this happening, and what can we do about it? But I think a lot of people overlook their beneficiary structures in their own setup. So whether it's their insurance policies at home, their personal policies, whether it's their beneficiary policies at work, or they've just overlooked the will altogether. They haven't done one in 10 years, or their life has changed significantly, and they haven't added those changes to their setup. So I think it's very important, especially with high potential for something to happen. And whether it be, it doesn't have to always be death. It can be certainly something that puts you in the hospital, and now you need to have somebody else making decisions for you. I think it's very important to identify who these trusted individuals are. Who's the trusted individual in your life to look after your decision making? Who's the trusted individual in your life that you want to pass wealth along to, or who do you want to pass wealth along to? And if you have children under the age of 18, who's going to be the trustees and make those decisions? I think those are incredibly important conversations that we should be having. Well, we should have had them before if we didn't have them already, but specifically now with what we're going through, if you haven't done it, now's a really good time to look at that.
Agreed. And, one of the other things, we as a firm look after a number of companies for their group benefits and pension plans. And one of the things that sometimes employees tend to overlook is naming a contingent beneficiary. They may, hopefully name their spouse as their primary beneficiary, but sometimes they neglect to name a contingent beneficiary. And that's really important because, if the plane goes down with both of them on board, you don't want the money sitting in an estate. If you have children, you want it to go to those children, then, like Shawn says, make sure those designations are up to date. If necessary, make sure there's a trustee if they're underage, but look after that, be it for your group benefits or your pension or your own personal insurance. It's really important that you not neglect that, because you never know when or how something's going to happen.
And in terms of your will, it's not like it's a very expensive endeavor for one to have in place and to have it updated ongoing, right? Sometimes people do a good job of putting their will in place and naming that power of attorney, but then what happens is life moves on, and maybe there's a marital breakdown, maybe there's some changes, and so we forget often about those important things of updating, what your last wishes are going to be, if that is to come. And, and also one of the other things, and I'm sure Brian and Shawn will, pipe in on this, is make sure that people in your life know where to find things. How many times have we heard that, a person has passed and they had no idea where their investments were. They had no idea who their advisors were. They had no idea where to find mortgage documents on a second piece of property. Those are just kind of high level examples of, things that you should be considering during, it's unfortunate that these types of catalysts trigger these things right now, but it's, I think, from the opportunity of future planning for yourself that, no time like the present.
Yeah, super point, Corey. Super point.
Yeah, one of the things we've done as a firm or tried to do is to bring a client, an established client, in with their children and sit down in the boardroom and say, here's what mom and dad have, here's where it is, here's who they deal with, here's what would happen if something were to happen to mom and dad, sort of how it would, the whole thing would work. And it just gives the children somebody to know who to contact, where to go, what to do if something should happen to mom and dad. And it's going to, at some point in time, they're going to be faced with this. So if they have a better idea of sort of what to expect, it just allays a lot of fears that they're going to maybe have at that point.
Yeah, that's really good advice, guys. Thank you for that. Should a portfolio be rebalanced?
I think the opportunity to rebalance during these periods, I think you have to evaluate, okay, what is my risk profile? What is my time horizon? Where am I going? Some of the opportunities when you have a correction like this, if you're running non-registered open type accounts, there is an opportunity to create a capital loss that you can carry forward to future capital gains when things get a little bit better.
Yeah, and let's not forget, there's a tremendous opportunity right now with markets being beaten down that you could turn around if you have sufficient fixed income already in your portfolio. You may, and you have cash sitting on the sidelines, you may want to consider putting that in some of these, in some equities that have been beaten down, because it's going to represent a real bargain for you, a real opportunity. And when the market comes back, those equities are going to grow and you're going to have started from a very low point. So profitability isn't going to be that difficult.
Yeah, most certainly. And depending on timeline as well. Like if there's, I think on a case-to-case basis, you have to look at what your goals and what's my timeline. But for the right person who has a longer time frame, this is a tremendous opportunity. And I think that we often feel very euphoric during good market conditions, but it's during these downturns where it's the most opportunity and we receive the absolute best results. So I think for the right investor with the right risk tolerance and the right savvy for this environment, you can make an incredible amount of money should you want to.
And I think the other, the other thing to be looking at, as Brian and Shawn both touched on, is, what are your income needs right now? If you're a retiree, if you are feeling very stressed about, can my income needs be met over the next 12 months, over the next 24 months? There are other options out there that aren't, tied to the market. And so, if you feel that stress is becoming overwhelming, then it's probably a time to reach out to your trusted advisor and have a conversation about some of those options.
And that's a good point too, Corey, because we just had that. One of our clients at our firm this past week, and feeling a little uncomfortable with market conditions, we're able to tie together a solution that provides guaranteed income for their entire lives without risk. So it ended up being very favorable for them, considering their objectives and what they needed.
Perfect. No, that's really awesome to hear. Is now a good time to review life insurance coverage?
I'd say so. I don't think there's been a better time. This is right now. And if you didn't have enough insurance, now is the time to make sure you backfill it. I think there's a lot of people who are probably underinsured, who have had it on a to-do list, or it's been a wish of theirs for some time, and they haven't done it. And if that was in those situations, I'd want to make sure that I took the time to identify that and then, do my best to fill it. And in fact, I was really worried 3 or 4 weeks ago when this first started that the insurance companies would not be cooperating as much because the risk had changed potentially so much for them. But it's the exact opposite. I'm seeing the insurance companies, for the most part, are really jumping in and trying to offer as much insurance as they possibly can to their clients. and making it done in a fashion where it's very easy, and it's probably never been easier to get insurance. So for some people, this is a great time to start looking at life insurance or disability or criticalness to add to your portfolio.
And I think also, when we kind of loop back in with cash flow, a lot of times when you sign up for your mortgage, you take on the bank's, insurance product. And, what we have learned over the years is that, that is a very favorable experience for the lending institution. It's not really that favorable for you as the borrower. And we always recommend to replace your mortgage insurance with life insurance. So again, it's one of those times where, you can evaluate and say, okay, how much is this actually costing? Most of the time you're not even paying attention. You're happy to get the mortgage, you're happy to buy the house. But now is one of those periods where, if you're at home and you have that time, look at your mortgage statement.
Yeah.
What is that mortgage insurance costing you on a monthly basis? Sometimes it's just, well, it's only $100 or it's only $90. Well, maybe you could cut that in half. Maybe you could cut that by 75% in terms of what that's costing you, right? And again, that comes back to those, dollars and cents and pinching those pennies. And, and I think it's one of those periods where, you should be reviewing those things.
That's a super point too, Corey. That's a really good point. And I think a lot of people don't realize they'd probably save hundreds of dollars a year if they actually did that. So for some people who have mortgage insurance, they could have the same insurance for, if they're in good health. I mean, usually if you're in good health, you're always going to have better costs. But for the average person, you're probably going to save hundreds of dollars a year just by looking at personally owned life insurance that's not going to end, as opposed to your mortgage insurance, which gets renewed every time you do your mortgage. So it's a really good point you made. Yeah.
No, I agree. And one of the things I point out when I'm speaking with clients is I say, just think about this for a minute. Who is the beneficiary of that mortgage insurance? It's the bank. It's in their best interest. They're going to get paid if you die. Wouldn't you like to have it set up where you can name who the beneficiary is and you can do whatever you want with the money? If you choose to pay off for your mortgage, that's your business. But if something is happening in your life that's more important at that point in time, you can have the money go somewhere else. And, you have options, you have control of it, as opposed to it having no control. Yes, your mortgage is paid off, but that's it.
Well, I think that's what most people forget on that type of product is that if you start off with an example, a $300,000 mortgage, and the rates are similar to a personally owned insurance product, but we go down that road 15 years, and now your mortgage is paid half as much. So you now owe $150,000 to the bank,
Right.
But you're still paying the same rate that you would have paid as a personally owned insurance, and you would receive $300,000 tax-free to the beneficiary, as opposed to the bank receiving $150,000 and just waiving the remainder of the loan. So I think that's often a key feature that people miss.
Yes, and not only that, every 5 years your mortgage renews, so does your mortgage insurance. It goes up in price.
Yes, agreed.
100%. What are the advantages to owning a whole life insurance policy during these challenging times?
I think one of the main advantages is the fact that the money that's inside an investment grade cash value life insurance isn't basically in the market. It's outside the market. So it's not being affected by what's happening, what we're seeing happening right now. It's sheltered, if you will, from that to a large extent. The investments are in other things that are going to still continue to provide a return. And not only that, it's tax sheltered. And there's a limit. There's only 4 or 5 places that you can put money where it's tax sheltered. And this is one of them. And it can also provide you with a tax-free income in the future when you're ready to retire.
Yeah, I'd agree with those sentiments. I think it's been great. The people I've been reviewing with that have a healthy amount of cash value life insurance, investment grade, are sitting in really good spots because they've got, in addition to their investment portfolios, which we've structured and done a good job, I think, in the past to shelter from some risk, we now have a nice, healthy, amount that's now sitting inside of this cash value. So it's a tremendous opportunity right now for them to know that I have the security to have that cash value if I need it. And two, if I needed it, of all the times to get credit, now's a terrible time. It's obviously with the pressures on the bank, and it would be tough whether you're a person or yourself, or if you're a business owner, to walk in and say, hey, I need X amount of dollars, but you can actually go and extend and borrow that from your policy without having to do a credit check, without any type of stress against your personal credit. So it's a great way to know you have a buffer, an actual true emergency buffer inside of your personal plan.
And you look at it and sometimes people aren't really sure what exactly, whole life is versus term. And kind of the best analogy that we've come up with over the years is kind of renting versus owning. And I think that kind of, gives you a little bit of perspective on on what those types of products can offer you. And, as both Shawn and Brian alluded to earlier, the investment portion inside a whole life policy, as an example, say you had accumulated $50,000 inside your whole life policy, and if we use today's proxy of the market, correcting it, in the double digit range as it has, the $50,000 hasn't moved down 1 cent. And so that's what's called vested. And being vested, that becomes very much a security blanket if needed, that sometimes is often overlooked.
Yeah, good points, Corey. And one of the things I point out to clients, I use the analogy of a term policy is like a staircase. So every 10 years, you're going up a step in terms of price. And, the stats show that about 1% of term policies ever make it to a death claim. And why is that? Well, because they're eventually at some point, they're going to get so expensive that the individual who owns it is going to say, I can't afford this anymore. I'm going to get rid of it. Or they outlive it. Most term policies will end at age 85. And if they happen to pass after that, guess what? There's no payout.
Agreed.
Okay, perfect. That's the last kind of questions that we have. Because this is a Facebook Live, we're going to open it up to anyone that would have any questions that's watching right now. While we wait for some question, guys, is there any other comments or maybe some tips or tricks or anything that anyone has that you would like to get out of there?
I'll just make a comment that I can't say how pleased I am to see society as a whole coming together the way they are. I mean, if you watch TV, if you go online, you see it every single day. You see people who are, whether they're musicians and they're reaching out to other musicians, or there are actors or musicians who are donating money, or they're putting up signs to support the people who are essential services out there doing all the things that are so dangerous these days. It's just so nice to see humankind coming together, and it's not just here in Canada or here in Ottawa. It's right around the world. Everybody seems to be coming together. Some of the old conflicts have been put aside. The weapons are down, and people are getting along and trying to help each other. And that's great to see.
It's super nice. Yeah, super nice. Sorry, Corey.
I was just going to say, it's been interesting, as we move along through this, isolation period, that we have, these wonderful things that are starting to happen. And maybe, some of the conversation at the dinner table gets a little bit better. Maybe you're talking about more about what the kids were up to. You're not so focused on, well, what are we going to buy next, or where are we going next? You're staying very much present currently, and the wants versus needs, conversation is changing. I think it's wonderful to see, in people's communities how, people are stepping up and helping out, whether they're making masks or, even in my own circles, my aunt was, making masks for the family, and, you're trying to, help out in every way that you can. And so it's great to see that.
Mm-hmm.
It is amazing. It is amazing. And there's some really neat, even environmental effects. Like I just was reading the paper the other day. I was talking about northern India. There's some communities and cities there that they haven't seen the Himalayas. I don't know. I think it was like 40 years, and they're now able to actually look out the window and see the Himalayan mountains, which have been covered by smog for all this time. And I just think that's incredible. And the pictures are absolutely gorgeous. Like that's,
Oh, yeah.
I can't believe that the mountain's got to be half the horizon. And I can't believe that someone sat there for almost there's probably people their whole lives that couldn't see it. And it's probably takes up half the horizon line because the mountains are so big.
Wow.
Yeah.
Incredible.
Any questions at all, anyone?
I'm not seeing anyone, but I actually have a personal question, just because I actually did my tax return and it came in pretty quickly. So I'm not going to say how much, but around $1,000. Would you recommend if I put that into a TFSA or an RRSP?
Well,
I think a lot of it depends on, in terms of your income. We have clients that will come in and they'll say, oh, I got to put the money in an RRSP. And I'll say to them, well, why are you going to put it in an RRSP? Well, because that's where you're supposed to put it, right? And I say to them, well, no, let's slow down here. Tell me how much you earn. And, if you need the tax deduction, we'll be happy to put it in an RRSP. But if you don't need the tax deduction, let's put it in a TFSA. It's still going to be tax sheltered. Yes, you won't get the tax deduction, but when you take it out one day, it won't be taxable either.
Yeah, that's a good point, Brian. I think there's a few people that fall off on the times not to use an RSP. It's the lower income earners, probably they don't receive enough advantage, probably don't do an RSP would be their benefit. Use a tax-free savings account, set it up like a long-term investment plan. But then you also have people who are at the higher income side. If you've got a higher than average pension amount coming out, and you're earning a lot now, and you're going to earn a lot as a pension, and you're in a higher tax bracket at that point in time, then saving an RSP is not going to translate into a huge advantage for you, because now it's going to come out as taxable income, and you've not received any relief from a tax bracket perspective. So you're better then at that point to try to find non-taxable income opportunities. So whether it be a tax-free savings account, whether you invest inside of an insurance, cash value life insurance, but there's opportunities that you can provide, but RSPs are not always the best option for everyone.
Yeah, one of the things that always astounds me is you talk to people about RSPs and they've maybe been really good savers and they've saved a lot of money in an RSP, and then you have a conversation with them and you say, well, it's important for you to understand that if you and your wife go on a trip and the plane goes down, that RRSP money is going to be 100% taxable before it goes on to your children. And they kind of look at you and go, really? And you say, yeah, so, that $500,000, the bill that CRA is going to send you is going to be $250,000. And they go, oh my goodness, I didn't realize that. So that's why it's important, as we were discussing earlier, to take into account the estate planning as well as the saving, and to utilize that registered money early. And, it's fine if it's passing to a spouse, it's a rollover, tax-free. But if it's going to be going to others, family included, children included, it's going to be taxed 100%. So you may want to consider maybe spending that money first, or having some insurance that's going to be able to pay those taxes. So RRSP isn't the be all to end all.
And I don't think it's a matter of, sometimes when we have these conversations, people interpret it as, well, I don't need to save. And that's not what we're getting at. One of the value adds that we bring to you when you're a client of ours is we really look at what, the impact of taxes later on in life. If one is not on track with achieving their goals, then that also puts a spotlight on which bucket you should be allocating your savings to. And so that's something that we try to stress ongoing.
Yeah, and it's the planning aspect that we're offering to our clients to say, let's not just do one thing, and let's not just look at one thing. It's the whole enchilada. We've got to look at the estate issue, the retirement issue, and the day-to-day living issues and budget and all those things. It's all those factors that play into financial planning, and that's what we're trying to stress and do for our clients.
And I think the other thing is we always get asked, well, what is the number that you need to save? And I think that, if one is asking that question, then that says that you need to engage in a financial planning process.
That's the
right?
time.
Right. That is when you need to be evaluating, okay, am I going to live on a $40,000 retirement income? Is it 50,000? Is it 60,000? And people often will, if they are aggressive with their savings, they generally overshoot on the amount that they're going to need, right? We see if somebody retires early 60s that their spending, probably stays the exact same as if they were working until the latter years. You get into your 70s, you might not travel as much, you might stay home a little bit more. So things change. And so, but again, what I was trying to get to is that there's no right number. But it also comes down to, if you're not on track for your savings goal, then, you really only have a couple of options. You either ramp up that savings plan if the budget allows for it, or we might have to think about rewiring a little bit in retirement, and maybe I have to supplement with a part-time job. And have I considered what the government benefits are? What does CPP and OAS actually mean to me on a monthly basis? A lot of time that is discounted, and it's not really looked at until arguably there's not enough runway or time horizon to get you where you need to go.
That's a great point.
100%. Any other last questions that we have out there? The one that is on my mind, just because I was supposed to be traveling during this time, is I took converted a bunch of Canadian money to American money, about $500. Do you guys think I should keep that American money, or is now a good time to convert it back to Canadian?
It's a great question, Ben. I think it really, it comes down to if you are, and this kind of goes into, a further conversation with people and their investments. And I think, if you were to look and you say, well, what actually is the value of my US dollars if I was to convert it back to Canadian? Most of us can probably count on one hand in the last many decades how many times the Canadian dollar has been at par. So generally, if you have an issue with cash flow, if you're having an issue with savings and you do have US dollars, saved up or allocated for a trip, it might be a great idea right now to convert it back to those Canadian dollars. We're not quite at the 40 cents on the dollar, but we're definitely getting into that 30+ cent range right now. So, on $100, you're going to get that 130, 135 back in your jeans. And that also goes back to, from an investment standpoint, we often, when we look at what's going on with the US stock market, if you're owning US equities, that lift that you get off of owning a US equity can be quite significant. So that a lot of what we see in people's portfolios that have US exposure, the pain's not that bad right now, relatively speaking, because of that currency factor. And so if that's something that's not in your portfolio, then it's probably worth a conversation with your trusted advisor.
I won't tell you what year it was, but when I was a little boy, I went across the river, because Windsor's my hometown. I went across the river to Detroit and I bought a package of gum. And I remember that they gave me change. And I'd given them exactly the right amount for the gum. And they said, no, you get change. And I said, why do I get change? And they said, because it's Canadian money. It's worth more than ours.
Wow.
That's one of those times on your hand that you can count.
Handful of times,
Yeah.
that's right.
Yep.
All right, well, there's no more questions coming in. Do you guys have any final statements you would like to say, or is this till next time?
Just a reminder that anybody wanting information on the Canadian government programs, if you Google Canada COVID-19 Economic Response Plan, you'll be directed to the right place.
Perfect.
Pay attention to that cash flow.
Yeah.
Awesome,
Thanks,
everyone.
guys.
Thanks, Ben, for setting this up.
Yeah.
Thank you, everyone.
Take care, everybody.
Bye, everybody.
Have a good one.